Welcome back to Millions by Nephew. It's Nephew. What's going on, guys? All right, so I'm excited to talk about this game-changing article that just came out for GameStop. This is incredible news. I'm a bull. I'm a long-term bull. You know, I started buying this company back in February, and I already knew the console cycle was going to happen, but I started accumulating shares, and man, I started like putting out videos and just telling people about it, and everybody's bashing me like, yo, GameStop going bankrupt, bro. It's not gonna make it. So in this video, I want to cover basically all the key points, the bearish case, the bull case, everything that's been said, so that we can like reassess the situation going forward, and guys can make sound decisions based on that. You know, on this channel, I have to make sure you guys know ahead of time when information comes out. That's why you guys subscribe, so that you can know about those stocks before they make them 200, 500, 800, 1200% returns, you know. And of course, this is not financial advice, so do your own due diligence, but I will put the articles in the description so you guys can check it out for yourselves. Okay, so where we are right now, GameStop is $4.15. It's up 3.49%. Yesterday it was at well, you know, it was the weekend, so I believe the last close was, where did it close at? We closed at like at $4 or something like that. Previous close like $4, so we're up, definitely up. It's pretty good to see. See what the chart's looking like. As you can see, it's looking like something's happening here, and this is why I wanted to make this video, because you can see something is starting to bubble up. Now normally we go up, we come down, we go up, we come down, and we going up, and we stopped here, and that would mean that we go up even higher. Most likely tomorrow we should see an increase and going up. Now right now the technicals is saying to sell. It's not on the buy side yet. Remember, this stock is fully shorted by like a lot, and where's the PE ratio? Everything for this company is doing pretty, like, it's looking pretty bad as far as everything is concerned. Cash flow looks pretty low right now. It's not much of it, and you know, so you know, where's the short interest? I don't see short interest on here. Shares outstanding 64 million. So yeah, it doesn't show, but the last time I checked, short interest was 100%. So it was crazy. Like everybody and their mama and their grandmama and their nephew was short in this stock. So that's when I buy it. While everyone is showing fear, that's when I buy. You know, whenever greed kicks in, that's when I'm going to sell. All right, so let's talk about this article right here. This came back. This one came out on the 26th, so we're going to go over this one first. This one says, video game sales soared in June. Can GameStop be far behind? All right, so, and it starts off by saying, there is no let up in sight for video game demand during the coronavirus pandemic, and the console upgrade cycle hasn't even kicked in yet. The combined sales of video game hardware, software, and accessories are breaking all kinds of records. Although the market seems to have all but written off GameStop after a worse than expected earnings performance last month, perhaps investors shouldn't eulogize the video game retailer just yet. Its revival might be riding this wave of industry growth, which will only accelerate when the new game consoles are released. So, right now, the bull case is that console cycle. Secondly, the risk to reward value. They lost 90-something% of the value, so there's just way too much risk reward versus risk. There's way more reward versus risk. Shorts, their case, bankruptcy. So I'm just give you a highlight for that. It says the rising tide lifting GameStop's boat. The NPD group recently said that there was a tsunami of spending across the video game industry in June, hitting levels for the month that haven't been seen in over a decade. Sales of video game hardware, software, accessories, and game cards surged to $1.2 billion for the month, a 26% increase from the last year and the most recorded for June since 2009. That's incredible, guys. All right, so then it goes on to say year-to-date spending hit $6.6 billion, the most since 2010, when $7 billion was spent. All right, this is remarkable for a number of reasons, not least because it was just months away from Microsoft and Sony's release of the latest Xbox and PlayStation game consoles, respectively. GameStop's slump is partly due to video game players holding off on buying new games and equipment as they wait for the new consoles. Okay. So it's like people don't want to start buying games because they know that the new systems are going to be coming out soon. So why should they buy the games, you know? So then they say there's little sense in buying software that won't be compatible, yet the lockdown due to COVID-19 has apparently turned all that upside down. And I just want to state in the article, PlayStation is backwards compatible with PlayStation 4 games. You'll be able to use your PlayStation 4 controller. So people are probably understanding that, and they started buying the games, again, knowing that the games would be backwards compatible. Just wanted to put that out there. A few key pieces fell into place, and if you guys want, I'll link an article to that because we do have proof of that now being backwards compatible with PS4. All right, hardware spending fell 17% in June to 191 million versus last year. Not surprising because of the new consoles coming. Dollar sales of the game titles it tracks grew 49%, 570 million compared to last year, the highest total for June since 598 million reached in 2010. Hardware sales are up 25%, while software is 19% higher. Okay, so sales are much higher now for the sales of the hardware and the software, and this is mostly contributed to Nintendo's Switch. Demand was so high for the $300 Switch console that shortages developed. That led gamers to buy up the Switch Lite, which retails for $200 and differs from the full version primarily by not being able to connect to a TV. There are now shortages of that model as well. We got my niece that model because she wanted it and they were all sold out. It says in June 19, Sony and Naughty Dog released Last of Us Part 2 on the PlayStation 4, which you could also watch the full walkthrough on my gaming channel, it's not Millions by Nephew, that's this channel, Nephew Gaming. You just type Nephew Gaming in and you can watch the full walkthrough of Last of Us 2 if you want. Played that whole game. It was a really cool game, and they sold a lot of copies. All right, so it says that's why GameStop investors should have a lot of hope that the retailer will surprise the market when it reports earnings in September, guys. You hear that? Investors should, I'm going to say it again, that's why GameStop investors should have a lot of hope that the retailer will surprise the market when it reports earnings in September. All right, so GameStop is ready for the future. That's what this says here. GameStop is ready for the future. All right, so it says, although GameStop's latest financials disappointed Wall Street, it was able to transform itself into a go-to destination during the pandemic by using its e-commerce platform. All right. It's reported that e-commerce sales grew 519% in the first quarter and were up 1,000% during the 6 weeks its stores were forced to close. Tracking closely to earnest research estimates showing online sales through the video game retailer's website soared 1,500% as the pandemic began. All right, so this is the likelihood that GameStop is continuing to do brisk business now that its stores have reopened is high, which means the deeply discounted valuation the market is assigning to the retailer stock is way out of whack with reality. You hear that, guys? You hear that? It says like the discounted valuation the market is assigned to the stock. This $4 stock price is way out of whack with reality. That is like music to my ears. If you're a bull, that is music to the ears. I don't know what you guys are going to do. You shorts might want to start covering, guys. I'm telling you, you might want to start covering. But I'm no financial advisor. Do your own due diligence. GameStop trades for a ridiculous 0.5% of its sales, a fraction of its book value and cash on hand, and a miserably 2 times the free cash flow it produces. Not only is it likely riding the wave of the pandemic growth, but the console upgrade cycle also will kick into gear almost immediately after it posts the next earnings report. You hear that? Okay. Just making sure you heard that. All right. So now, you guys know that guy. You ever seen that movie, The Big Short, with Michael Burry? He's the guy that's in the beginning of the movie sitting at the desk with a glass eye. He's basically the one with all of the money in the one company, and everyone's bashing him and calling him. He's playing a guitar, and he's got the, he's basically a loner, but he's like, he's got a woman at home, and, he's just basically like in his office, and he runs the office, and he's the man. He's the man in that movie. Watch the movie. This guy predicted the housing market crash and shorted it. He completely shorted the real estate market. Made, I don't know if it was $1 billion or it was some kind. I'm just going off the top of my head, but he made like a ton of money for his firm. All right, so Then Michael Burry, that same Michael Burry, decides to invest in GameStop. Now, prior to that, I had already had GameStop. I even made videos prior to Michael Burry coming on board. So you guys know that I'm a bull. I'm a super bull. I've been GameStop bull this whole year, and I've been saw the trade as it was. I saw the value in the trade, and I'm gonna link the GameStop videos that I made prior to this in the description so you guys can see that I've been on top of this trade the whole year. And I'm gonna have plenty of videos explain why I did all this year when the trade works out. For right now, let's just continue to read this article. So this article says that why Michael Burry from The Big Short may be right. And guys, go ahead and smash that like button if you're liking the content so far. If you're getting any value out of this, go ahead and smash the like button and hit the subscribe button because you're gonna be in for a treat going forward. The transition, here's the bullet points. The transition from physical sales to digital sales is not occurring as fast as the market thinks. Okay. And just to highlight what they mean by that is that they thought that this is the bear's case. They thought that the transition from physical sales to digital sales would happen quickly, that it would just happen overnight, like Spotify with iTunes, the way it just, boom, it's over. There's no more, sales. And that's not what happened. There are multiple rational reasons to buy physical copies of games instead of digital copies. And we're going to talk about those reasons in this article. All right. GameStop's future is highly divergent. There are multiple possible scenarios from bankruptcy in the coming years to cash flow significantly exceeding the current market cap. There's a lot of things that could possibly happen. Although bankruptcy isn't looking like it's going to happen, guys. The case for bankruptcy, I believe it's over, and I'm going to explain why in this article. Last year, contrarian Michael Burry made a massive investment in GameStop. During the COVID-19 crisis, he increased his stake in GameStop, and now he has a stake sitting at 4.3%. Michael Burry said to Barron's on 2019, I believe they will have the cash flow to justify a much higher share price. That's all I had to say. Because the most prevalent bearish case that the digitalization of video gaming will lead GameStop to bankruptcy. It's overestimated by some, most. They meant most. I believe the market and most investors are overstating the speed of this transition. That's why this cigar butt might have one more good puff. That's pretty cool. It says, we expect GameStop's business will perk up a bit during 2020 and 2021 as the new console cycle with associated software updates and introductions finally gets underway. Now let's talk about GameStop's business model. And I just highlighted a couple points. You guys can go over this article you want on your own time. But I just wanted to highlight a couple things. GameStop's gross profit was derived from reselling pre-owned video games, while its share of revenue was only 30%. GameStop has experienced declining pre-owned video game sales for years. 42% in 2015. 42% of GameStop's gross profits were derived from pre-owned games. So most of GameStop's money comes from the pre-owned games. We can basically understand that. GameStop's existing lucrative pre-owned business model is something that you can't ignore that. That's pretty much how they make their money. They're only making a small percentage of the sales from the games. Then it says the idea that GameStop's decade-old business model is simple. Get people in your store for hardware and accessories and then hope that they buy some games, preferably pre-owned games, while they're at it. People just stopping by. Okay, so these are the different types of customers that go into GameStop. People are just stopping by accidentally. Many GameStop locations are high foot traffic areas like malls or shopping centers. These people look around and might buy some items. Secondly, lure customers interested in hardware into the store with promotions and sell them preferably pre-owned video games. So you check their Instagram page, you'll see all types of promotions, and on Twitter. And thirdly, the loyal group of customers like me that stop by for a variety of reasons, just to go in there and see what games are in there. But I usually go in there for used games. The nostalgia of it. I just like going to the gaming store. It's like a place where a grown-up can still be a kid, but you're too big to be a kid, so you just use the excuse of I'm going to the gaming store. It's one of those situations. So the digitization of the video game sales has clearly been an issue historically. GameStop's hardware sales have been strong over the last few years, while pre-owned games sales have fell off a cliff. So that's kind of what the problem is. The pre-owned games have just completely dipped, and that's where the stock price dropped. It's logical to assume approximately 50% of more of the Nintendo Switch's games were sold digitally. They suspect that, and this article author suspects that that's why the revenues of pre-owned games at GameStop declined between 2016 and 2018. GameStop wants customers to buy new games with pre-owned games and then later buy them back so they can resell them again. GameStop lures customers in with hardware and then sells them games simultaneously. Ironically, I believe the case can be made that this model is stronger than the most investors think. To elaborate, that is, I will discuss the digitalization of the video gaming world. He's going to do, I'm going to go over that now. Digitalization of the video gaming, especially console video gaming, is so much slower than people think. So it's not going to just move over right away. And here's why. Oftentimes, authors and I like this part of the article because he states right here that they've just been super bearish. Oftentimes, authors on Seeking Alpha showcase this magnificent graph to readers to be able to visualize the vast destruction of digitalization has made on GameStop's business model. And while it is true that digitalization has cut into GameStop's lucrative pre-owned business model, that transition is much slower than anyone thinks. It's comparing apples to pears. This digitalization includes the rise of mobile gaming and the return of PC gaming, which is great, but however doesn't affect GameStop. So they've been making their bear case using graphs and information that doesn't even pertain to the business model of GameStop. Would you look at that? It's time to start covering, guys. Time to start covering your short positions. Sony's reports that give investors a much better indication of what pace the transition to digitalization is occurring for consoles. This data is much more relevant for GameStop shareholders since we know GameStop primarily sells console video games, collectibles, and some PC video games. However, the console video games, especially pre-owned, still drive most of the shareholder value. So here's the Sony releases the full game software digital download ratio of all PlayStation 4 sales in its supplemental information report. Wow. Clearly, this data is much more accurate since they do not include irrelevant mobile or PC gaming sales. Instead, it concentrates on console market. You see that? It goes up and down. So this is the PlayStation full game software download ratio. The so-called digitalization is not occurring at the rapid pace most people think. Okay, let's just jump back down to why. Physical sales. First of all, the materialistic element of physical video games should not be underestimated. People like to collect their games, and people are able to rent out their games to friends. It gives people a sense of control. Number two, at normal prices, physical games are cheaper than digital games, yet digital games are generally cheaper than or during promotions. So, I mean, when you're trying to buy a game, obviously pricing matters, especially during holiday periods. Generally, they have more and bigger discounts on video games. Digital sales will become a little higher, significantly higher, but most notably, the summer sale period drives customers towards digital thanks to huge discounts. Remember, during the release, physical copies are generally cheaper. So, when the new game systems come out, the physical copies will be cheaper. And yes, digital games do go cheap as well, but you can't write off physical games. So people are able to sell their physical copies again and again. This significantly lowers the cost of playing the game. The PlayStation 4 and Xbox One do not have tons of disk space. The PlayStation 4 has a 500 gigabyte hard drive, yes, and with the opportunity to expand it, but that is expensive. You also have to buy that. Call of Duty Warfare is 194 gigabytes, for example. Okay, so in some places, the speed of one's internet, like over in the Philippines or when I'm traveling somewhere, makes loading big games a daunting task. That's why there are more than 2 million Netflix DVD subscribers. These people do not use the digital platform, but instead get their movies sent physically. Wow. Most of the time, people prefer this due to the bad internet connection. Can you believe that? Nielsen, this is one of the data collectors, one of the biggest data collectors online, states that a majority of game consumers fancy owning a physical game instead of digital version, and that's from Nielsen, guys. The same people who track all the basically all the barcode sales from music and movies and everything else, so they would know. You can't argue with what they said. But of course, that was a 2018 report, so we don't know what the 2020 report is. But it's more complicated than one thinks. So the author believes that the number of digital sales relative to the number of physical sales depends on the game genre and the game size. He deems that it is plausible that single player games with vast download sizes obtain more physical sales in relation to digital sales. Most people only play them once, so reselling them makes it significantly cheaper, which I would have did with Last of Us. I mean, I would sell it, but I bought the digital copy, so I'm stuck with it. I can't like sell it. I'm stuck. I paid $60 for Last of Us 2, and then Ghost of Tsushima came out. But I wanted to own Ghost of Tsushima because even though it's a single player game, it's a game that I knew I would get the most fun out of. And I can't sell Last of Us 2 to discount Ghost of Tsushima. I'm angry. That's gonna suck if you buy a game that you don't even know if you like, and then you find out you don't like it, and then you can't do nothing about it. If you get the PlayStation 5 digital only, you're gonna be screwed, guys. You're not gonna be able to do that. But because I'm also running a gaming channel, it makes sense for me to have the PlayStation 5 with a disc, because then I should buy games that I'm questionable about so that I can do the giveaway after I get done playing them to my audience that is on my Instagram. So most people only play them once. Oh, you already said that. Okay, so we're gonna go down from here, and this is like the takeaway. Now, you know, Take-Two just beat earnings, so this is really relevant right now. Take-Two's digital physical revenue rate has much lower compared to its main competitors. I believe its discrepancy is due to Red Dead Redemption, a single-player game that consequently oftentimes is played on consoles. This again bodies better with physical sales. Additionally, Red Dead Redemption 2's download size is 90 gigabytes, which fills nearly 25% of the PS4 hard drive. Take-Two Interactive is heavily dependent on console market and clearly has a much lower digital share. Other video game producers gain much more sales from the games on mobile devices and generally makes multiplayer games. This tends to be a better fit for digital sale. Take-Two Interactive became the video game company with the highest percentage of digital sales. It is logical that lockdowns strengthen a digital product that could be bought and delivered instantaneously. It is a question for investors whether customers will continue to buy the products digitally. And there clearly is a market for physical video game copies. Video game companies want to move towards digital. Digital sales have a higher margin than physical sales. However, not all customers want it as well. We all know, and this is the bear case, that Amazon's dominance over the e-commerce market has given it a significant market share of all physical video game sales. Additionally, Best Buy and Walmart also sell physical games too. Clearly is a customer interest for physical games. Sony will sell both consoles with and without disc drives. Xbox will also. Clearly, neither Microsoft nor Sony wants to risk losing significant market share by dumping the disc drive. The lost revenue will outweigh the lower costs. So that's why that's happening. GameStop has been moving to collectibles to grow its gross profit. However, this clearly cannot turn around GameStop alone. Bulls hope that a new console cycle grows the inventory turnover of GameStop, which will increase its profitability. Now, GameStop historically loses money during the first quarters of 2020. Ironically, the lockdown has severely lowered its cash burn. See, in 2019, quarter two, GameStop experienced a $665 million operation cash burn. Now it only burned $49 million. Can you believe that? So they thought it would go bankrupt based on the fact that quarter two of 2019 cost them $600 million in cash burn. They figured in quarter two of GameStop, the company would go bankrupt because they only had $550 million. So it should have been bankrupt by now, right? But now, because of the lockdowns, it only burned $49 million. That's why its trailing 12 months cash from operations is actually positive at $200 million, approximately $50 million less from the current market cap. Clearly, the valuation is incredibly cheap, and that's likely why Michael Burry bought tons of shares. A vote of confidence? Insiders have been buying GameStop shares. Currently, nearly 14% of GameStop is insider owned. Can you believe that? Look at that. Insiders, baby. There was a short moment in time where there was 100% of all shares outstanding were short. That sucked. So anyway, the company has $570 million in cash and cash equivalents. Its long-term debt equals $468 million. We suspect that operation cash flows in 2020 will be even higher. It is very likely that the quarter alone will generate more free cash flow than the entire market capitalization of GameStop. Considering the company does have more cash on hand than long-term debt, that does make the company an interesting value opportunity. Shorters may be in for a lesson on asymmetric risk to reward. He's basically saying short squeeze. If GameStop is able to impress even the slightest shorters will be scrambling to cover their positions. All right, guys. So that is all for this article. There's nothing more I wanted to bring up. You guys, let me know in the comments below. Make sure you smash that like button, hit that subscribe button. Sorry this video was so long, but I had to cover every possible point because I don't want you to miss it. And if you guys want to read this stuff yourself, I'm going to leave the links in the description where you can listen to it all on your own, guys. This is going to be one of the most epic short squeezes in a long time. It's still like very close to 100% shorted against the stock. Join us on StockTwit boards if you want to join in on the fun when we get the really screaming bulls and popping up with the rocket ships. But there is obviously no guarantee the company can make it to the end of the year. Obviously, this isn't financial advice, and I'm not telling you to buy it. I'm telling you to do your own due diligence and destroy that like button. Make sure you hit that subscribe button. I'm also holding, just as a disclaimer, I am currently holding over 250 option contracts on GameStop. So I'm in for over 25,000 shares I tied up. I'm moving like an institutional investor on this trade. Like, this is going to be my biggest trade ever that I've ever done in my whole career that I've set up. So if I lose my trade, I lose a decent amount of money. But if this trade works out, then you're going to see a lot more videos about my strategy. All right, guys. So anyway, this is going to be one of the career-making type trades that I'm expecting. I also have a couple more of those, like Luckin and also my Bitcoin positions and things like that. But I'm just trying to let you guys know that I wouldn't be talking for almost 30 minutes about the company if I didn't truly believe that it was going to rebound. Most of the times I've talked about companies before in the past, they have also rebound. Maybe not for the long term, but definitely in the short term. In this case, this is a long-term trade, and you have to get in when you fit in because the price is actually very undervalued. But I don't know how long that's going to be with articles coming out like this. So guys, hit that like button, hit that subscribe button. I'll talk to you later. Peace.